Oddly enough, oil barely reacted to the outcome of the policy-setting Federal Open Market Committee's meeting. The asset remained flat. Ahead of the meeting, oil prices edged sharply higher, but then quickly returned to $95 per barrel. The Union's ban on Russian oil supplies and its forthcoming entry into force is now far more important for the energy market. There is a likelihood that the market will face severe energy shortages as early as December, and they may be short-term but enough to inflict serious damage on the global economy, which could further tip it into recession. The economic crisis may be quite deep and prolonged. Given such prospects, the largest market participants, in particular oil importing countries, will try to ensure sufficient energy reserves, and this in turn will contribute to higher prices. Therefore, oil will most likely hit towards $100 per barrel, albeit with pauses and pullbacks. By the end of November, it may well overcome this mark. In the meantime, Brent crude oil futures came close to the high of the past week. As a result, the volume of long positions decreased, which led to a pullback. The asset is expected to extend gains if the price consolidates above 97.50. Until then, a pullback will remain in force. The reaction of gold to the results of the Fed meeting was quite predictable. Instead of hitting at possible rate cuts as early as the middle of next year, Jerome Powell made it clear that the regulator would keep lifting interest rates until late next year, albeit at a slower pace. Against this background, gold moved towards $1,600 per ounce, and this means the yellow metal will most likely fall below this mark and try to stay firm there. The quote has already hit a fresh local low, sliding below the low of the current week. This indicates an increase in the volume of short positions. Now sellers are targeting the $1,620 mark. That is the low posted on October 21. The ruble, which had previously stubbornly ignored any major events driving markets, unexpectedly showed higher trading activity amid the Fed meeting. Like other currencies, the Russian one first advanced and then came back almost to its original levels, so nothing has changed. And the ruble continues drifting between the levels of 61 to 62 rubles per dollar. Nevertheless, such a sharp rise in volatility suggests that range-bound trading cannot last for long. Given its dynamics in the earlier months, the ruble is likely to lose value in the near future, probably next week. Later on, the market is expected to return to current levels. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.